Welcome. My name is Raul Lopez. I'm with the North Metro SBDC, and we are here today for part three of the startup series sponsored by the City of Westminster Economic Development. We actually have Shelby Wood here today, just popping in, say hi, and she's available for questions for those that are Westminster businesses or looking to be a Westminster business or looking to do business in Westminster. Definitely reach out to her. She'll pop her information in the chat here, and we'll also send it out to you in a recap email. But thank you, Shelby, and thank you, City of Westminster, for sponsoring this. And then I want to go ahead and just pass it on over to Miss Leslie John so she can introduce herself and start to talk about the information today, the topic.
Oh, great. Thanks, Raul. Well, hi, Brian. You have a captive audience, so you hit the lucky thing. We're all here to help. And I'm so glad that you found the SBDC. I've worked in the Denver area for about 30 years as an accountant, so I've pretty much seen it all. I've worked with manufacturing and nonprofit and retail, startups, and everything in between. And so I hope today to kind of fill in some gaps with knowledge gaps. You know, I didn't know this, but please know this is basic, but that's a good way to
Fair
start.
enough. Yeah.
Yep.
So I'm the only participant today. Everybody else is here working for me.
You are it. We're not working for you
All right.
today. Yeah. So you know what? And I was telling Michelle, because Raul has to leave us a little bit early, so Michelle is helping me with this. And she asked, well, how do you put these on? It's like, well, I don't even have a plan. And so that extends to you. If you want to stop me and ask a question, please do. This is a conversation and not just a presentation.
Okay.
I want your feedback. And since you have the captive audience, use your time wisely.
All right. Yeah, we don't have to go the whole, unless other people join, we don't have to go the whole hour and a half if it doesn't make sense. But I'm
Sure.
down for hearing whatever you got to cover.
Okay, well, let me get over here and I am going to share my screen and we will get started. You know what? You had just said something, and I always start by, are you signed up for the SBDC newsletters?
Good question. I signed up for a bunch of stuff very recently. I suspect
I
that's
love
one
those
of the things.
newsletters. I've loved those newsletters for the past 30 plus years because those newsletters are the ones that saved my bacon a couple times. I should have had information, you know, through your communication channels. And for some reason, here comes the newsletter and it's, oh my gosh, I better get on that. And more times than not, it was the SBDC's newsletter.
All right, I'll make sure I'm signed up for that. Thanks for the advice.
That you were new with the kind of new and remembered SBDC, so I wanted to give you that tip. Okay, so today's startup series, and we're going to look at just the basics, like I said, financial basics, but more importantly, and I don't know, but maybe you can speak to this because you had a business once and it was you, and you. And now the second time around, you got you plus 17 others. So pat on the back. But you're going to speak to, and you're going to know all about the readiness factor because you're already knee deep. And so that, like I said, financial basics and financial readiness is the focus of our time together today.
Okay. It does look like D joined as well. I don't know if that's an audience number two.
Welcome, everyone. D, Greg. I'm Leslie. Oh, here we have some more Eves. So I'm just going to hang for a minute before we go charging.
Wow, a bunch of people coming in all of a sudden.
Hello, everyone. D and Greg. Nice to have you. We are just getting started. And this is a conversation, so please, you know, unmute yourself if you have a question or use the chat. We'll be monitoring your chats. And, but this is a conversation. This is not just a presentation, me talking. I want to hear from everyone. Okay. Okay. Startup, financial basics and readiness. And we're going to start why financial readiness matters. And we have found most businesses don't fail from bad ideas. Everybody's got great ideas. The market needs something, but money problems, you know, that financial, how money moves through our accounts, how money is received, how much money it takes to buy your cost of goods. 99% of businesses fail, and it's money problems. And this session today is not about accounting. We're not going to get into the deal about accounting, but when you're ready to start your business, it's about this one question: are you financially ready to do so? And our goal today is, I just want to open up some awareness. Hey, I didn't think of that. Ooh, that was a little bit more than what I thought. We're not looking for perfection here, because none of us are perfect. We're all mere mortals. We all have our own financial lives, ups and downs, and kind of a couple curly cues in there. And so no perfection, no judgment, no anything. We just want to have more awareness and more knowledge. Okay. Okay, financial reality checks. So in the chat, I want you guys to let me know, just in the chat, if you didn't make any money for 6 months, what would happen in your life? Is it number one, I'd be good, I'd be okay, I'm good. Number two, it'd be tight, you'd get a little bit hot under the collar a little bit, worrying about when payments, checks are going to arrive in the mail, that kind of thing. Or number three, I couldn't do it. So if everyone could be, just put it out there. It's just to kind of get a temperature. Because with business and being accountant, when I work with business owners, it's so nice to work with a business owner that knows thyself. And so if you're tight, if money's tight, that's okay, because that's your awareness, you're dealing with reality, and you can change your situation. Okay, so this is our first little, we're dipping our toes into the truth deal by responding to this. Okay, when we do start a business, we do have delayed income. And we wrote down, okay, personal finances are directly related to your business success. And your business finances start with the owner or the partners. So if you take a partner on, you better know their financial picture. Their credit worthiness, right? How much debt does the owner have? If the owner has a lot of debt on their personal side and money is tight on the business side where they have to pay 17 employees, you know, owner might not be taking a paycheck, that kind of a thing. Savings, do they have, do you have personal savings? Because all of this leads to more stress. Lenders, partners, and even your own stress level are tied to these three things: your credit, your debt, and your savings. So get your arms wrapped around those. Better business decisions, because if you have personal finances and you want to take advantage of a cost of goods that they're having a sale on, if you don't have the extra pennies, you're not going to get the good price, right? Quantity discounts, those kind of things. So having your financial life in order does provide stability. Maybe not perfection. Maybe we overbought on that sale item, but we had the money to buy the extra and do the sale. Now, what does stability look like for you? And everybody's going to be disparate. And I don't want you to write it. I don't want you to just put it in your mind. Is stability, you have money in the bank and everybody's been paid? Is stability the number of customers that you have? Your stability comes from your customer list and beefing that up or weeding it out. Is your stability in your product pricing? There could be lots of different things that give you stability in making your financial decisions. So it's good to know those. Okay. Debt, savings, and your safety net. So before you get in business, it's good to go through these things. Do you have personally about a high interest debt? And I'm talking credit cards. I'm talking lines of credit, loans to mom and dad or Uncle Gary. All of that would be here. You bring in $1,000 and you spend $800 every month on servicing your debt. Do you also have a financial cushion? Well, what's a financial cushion? Well, finance people say we like 3 to 6 months of your expenses in a savings account or in something liquid that if something happens, you can get your hands on that money. So let's say you have $6,000 in expenses every month. That's your mortgage, your car payments, you're servicing your debt. You have to eat, you got to pay, you got to feed your kids, you got to buy them shoes too. So 3 months, that means you need $18,000 set aside. Or 6 months, 36,000. Those are big numbers, but again, it's something to think about. So that if you have your cushion, your business can run. Okay. Again, everyone is different. But to operate a business, you're going to have a cushion somewhere. And the reality of this situation is when we go to banking, banks are looking at risk. So when you're starting out, that financial burden usually falls on the owners. And that, again, goes directly back to your personal financial life. Okay, and everybody again's on your own level here. It's just, again, how much you want to put in. Okay, and if you don't have your money set aside, you're going to have more pressure when things go slower in the company. And too much pressure reduces your ability to take action. And we all know that when we're broke, we're not eating out. We're not going to the fun thing. We're not doing, we're not going, we're watching TV. We're not going to the concert. Okay. Survival versus growth phase. Most every business, they go through 2 phases. Now, this survival phase, a lot of people think, oh, it doesn't last very long. And it shouldn't. It shouldn't, but sometimes it does. There are some types of businesses that they are in the survival phase. Their margins are so close, razor thin. I would say that they operate in the survival phase and they're bold growing. Again, because their margins are that. It takes a certain type of business owner to do that. But your survival phase, you're building your customer list. You don't have your repeat customers. You don't have your sale, all of the things. So you don't have a lot of income. So in that survival phase, you're relying on your personal finances. And there again, you carry the business. You could be putting that 3 to 6 months of savings, that 36,000 you've had and you've worked so hard to save it, you could be putting that into the business as startup money. And it's high pressure because in that survival phase, you have brought in people to help. And survival is you got to pay those people, right? So let me see. I think I see a chat. Let's see. Oh, this is North Metro. Hi, this it gets for. It's very fundamental. Yep. So if you're looking for deeper, you guys can go to the chat, but that is some information on more if you need to get deeper, because this is pretty rudimentary, but it's kind of nice to go over the basics every once in a while. Okay, growth phase. This is when revenue starts getting consistent. This is when the business has enough cash to pay its bills. This is where you start getting, maybe we open a savings account because we have extra cash. And then we start thinking about growth. Well, if I got that new computer system, my back office could do X, Y, and Z. Or if I got the new, whatever, delivery vehicle. And in this phase, this is a fun phase because when things, it's like a car that gets faster and faster. When things start clicking on all cylinders, the momentum happens. It's just wonderful. And then you get the energy and it's a self-feeding cycle and you have a great business. Okay, so how long, this is a audience participation part. How long, just put the number of years or number of months in the chat. How long do you think it takes an average business in the US to pay the owner a salary? Startup business, not buying an existing business. Let's see, what do you think in the chat? Let's put that in there and see what, 5 years? Eve? Survival mode? 3 to 5, 2 years, 18 months. Nice, okay. It could be, that's not everyone. I know Molly, Madeline, Claire. 18 months. Madeline, 4 years. Nice, thank you. Well, it's usually 6 months to 3 years, depending heavily on the industry. Startup costs, your revenue, your profit margin. And some businesses, it's cyclical. So they make a lot of money in the summertime and not a lot of money in the wintertime. Lots of those businesses. So I really don't think, just working with small and medium-sized business, there isn't really a right answer. So the 3 years, the 18 months, the 3 to 5 years, that's where your personal financial livelihood, resilience comes into play to weather that storm, to be able to live or to strategize. Maybe it's time for husband to get back to work. He's been at home, but now in order to start this business, we need to do something else. So it's good to go in with our eyes open. It takes longer than what we think. Okay, and now this gets me to the funding, because there's a spot between the startup phase and the growth phase where things are starting to click. and dreams are being made, and we want to go to the bank and either get some relief for our personal input, financial input, or we'd like to get some help to expand, to do getting all our ideas going. Well, this is when we start heading to the banks. And the banks, they want to know, they're all about risk. So when you go in there, have your song and dance tight. That's what I say. You know your numbers, you know your financials, you know your product. You know, back in August 2024, there was a dip in revenue because of Jibba. Because they'll go back and they'll look. And you will have that information to present them. You know you're, can we trust you? Are these numbers, are you making this up? Or does this ring true? Can you repay? You know, and what they look on the repayment is income to debt ratios on your personal side and on the business side. Do you have your own money in the game? This is a big one because it's kind of like having skin in the game. If you go to the banker and you say, you know, I want to start this up in a wing and a prayer, and I think it will work, and I need $500,000 from you to do it. They'll say, okay, what do you bring to the table except for your great idea? You have to have some skin in the game. Okay, do you have backup? And backup, I'm talking assets here. Do you have maybe a line of credit that you've taken on your mortgage? So for those big cost of good purchases, you plan to use your line of credit to manage your vendor payment terms? I don't know. Do you have a savings account? Do you have investments accounts? Do you have backup? Okay, and then does this make sense? They're going to look at, they know market conditions. Okay, so if you're going to start a coffee shop at this place and you think these numbers and you're going to get the great sale, they probably already know about coffee shops within 8-block radius of where you want to be. So make sure you do market research. And great deal for you, the SBDC has a market research person. So Michelle, you can reach out to her. She's on this and she's on the chat. But if you want to reach out to her, we have, in addition to finance people that do advising, we have sales and marketing people, and we have that market research guy. And I tell you, I love market research because I hate paying or budgeting for market research. I don't know how many years, how many times I'm in a budget meeting for the new year, and I've got the sales manager, and he wants to do a $50,000 market research study for Jabba-Jabba-Doo, and my toenails curl because I'm a finance person and it's $50,000. It tells them their whole story, and that's wonderful. But for a finance person, if you can get market research for free from the SBDC, I encourage you to do so. And that market research is, who is my customer? How much does my customer make in a year? What is their disposable income? Where do they shop? How much do they shop in the community versus online? All of those kind of things. Because going back to the location you thought you'd like that you had picked out that you went to the bank, well, your customer may not be there. At that location, on that corner for that coffee shop, your customer may not have the disposable income. They can't afford the coffee. So that's not the place for you to be. The market research guy will help you with that. So huge plug. I love them. Business librarians are the same thing. You could go to your county library, and business librarians are nice people as well. But SBDC has their own. So, yeah, the old adage, you have money to make money, that's true. But again, the SBDC has advisors and they have also relationships with bankers and loan entities for all different types of loans. So if you're thinking, oh, I can only go to a First Bank and do a traditional, no. Reach out to the SBDC and they have people that can work with your banking. Grants and nonprofits and traditional. So something like that. Okay. Financial concepts. We're going to keep it simple here so we can move on. At the core, every business tracks money in, money out, what you own versus what you owe. Okay. And they just get into your financials a little bit, but we'll go a little bit deeper. So the first one is your income statement, often called the profit and loss. I learned it as what you do. This is what you do. This is your revenue coming in, less your expenses, and there's two types of expenses, cost of goods and overhead or administrative, and expenses coming out. Revenue less expenses equal your profit or your loss. And this report, one of 3 reports we'll go over for your financial package, tells you if your business is working or not. If I have revenue, $100, cost of goods, $20, I have a total gross margin of $80, right? I have $80. And that $80 going into your overhead expenses, your rent, your lights, your salaries, that's important. That's important. Do you have enough money of what you do, what you make, and then do you have enough money to cover your overhead expenses? That's what your profit and loss tells you, what you do, and if you do it well or not. Okay? Profit does not equal what you keep. Profit is not your take-home money. Does everybody get that? And I need everybody to do a thumbs up in the chat or something, because your P&L tells you revenue, less cost of goods, less overhead equals, right? And it says total profit or loss at the end of the report. But that's not your last step. There are other items, for lack of a better word, owner items, depreciation, receivables, if you have receivables, that are accounted for on your tax return. So when you're looking at a profit and loss report and it says profit $100, that $100 might be diluted because of some tax implications. Okay, so profit on your profit and loss, everybody gets confused about this. It's not what you keep. It's not the money in the bank, the profit in the bank, because taxes will still be owed on that money. And what you keep is the profit less taxes minus other obligations, depreciation, interest, those kind of things. And every situation is different. And this is a good place for me to kind of put in here another helpful something, is that at some point in your business discovery, I would recommend that you are not penny wise and pound foolish, and go find, and the SBDC can help you here again, it's amazing. Find a CPA and legal counsel that you can work with, because your personal life is here, financial life and you're bringing in your business life and they come together. At that intersection is where you need the strategy. You need tax strategy, and that can go into the type of entity that you have. And your tax strategy is not just for this year or next year. Your tax strategy with a CPA is 3 years down the road, 5 years down the road, 10 years down the road, maybe even 15, maybe when we want to sell the business. And that strategy happens now when you're thinking about your business. Don't be penny wise and say, I don't need a CPA till I'm knee deep. Get a CPA now, spend the $150 and go visit with them. Tell them what you're going to do, have your personal life. That $150 you spend, worth its weight in gold. And the same thing for legal. Because again, that intersection of personal life and business life, it's different for everyone. And so when you talk to your buddy at bowling and he says, oh, I did this with my business, he's got a whole different setup than you do. He's got a whole different enchilada. You are your own thing. Spend the money, please. Okay, get off my grandstand with that. Cash flow. Okay. I would have put this first if this was my deck, because all business owners are great at cash flow. They're awesome because 99.9% of people starting a business are watching their bank balance like a hawk. And that's cash flow. That's your cash flow statement. It's the money running through your bank. And what's important about that money running through your bank is that you want deposits hitting that bank account more than what you want expenses. And that is called a positive cash flow. We love cash. So I think this is the easy part of your financials because we're all used to it. We watch our bank balance like hawks. Money moving in and out. Sales are the payments you received. Money out, bills that you've paid. And of course, if cash runs out, business stops. Okay. But I want to stop here and tell you this. Your cash flow and your bank activity are not your financials. Okay? Your financials, if you want to say your bank activity is one side of the coin, we need to flip that coin over. And our financials, which is the P&L, the balance sheet, and the cash flow statement, they're the other side of the coin. And here is why. Okay. We sell on Etsy, right? And I sell a t-shirt and I put embroideries on it. It's a great t-shirt. And I sell this t-shirt for $50 on Etsy. 2-3 days later, Etsy or Square, whoever it processes through, on my bank account, I receive $48.50. Okay, one side of the coin is the cash, $48.50. The other side of that coin is the financials. So what is our financials for that transaction? Anybody have an idea, want to unmute themselves and tell me what the financials are? It's not just the $48.50. Anybody have any good ideas? Okay. I want to go back to the profit and loss. The profit and loss shows your revenue. I sold the shirt for $50. That's my revenue. And it shows expenses. What's my expense? $1.50 for the Etsy fee or the merchant fee or whatever. But Etsy took $1.50 out of my $50 sale and gave me $48.50. Do you all see how the $48.50 is cash, but the financials are $50 revenue, $1.50 dues and subs, merchant fees? It's a totally different picture. Everybody with me? Financials are not cash. Cash is separate. Another example. We sell the same t-shirt. That is our revenue of $50. But they don't, someone bought the t-shirt out in Oklahoma, right? And they're not going to pay us for that t-shirt until 30 days from now, because we have terms on our invoices, right? Just when we buy things from vendors, they give us time to pay for the product. Well, we do the same thing for our customers. So I have the revenue on my financials. I sold it today at 527. So my profit and loss is going to show the financial $50 and $1.50 expense, but my cash, that $48.50, is not going to show up till 30 days from now. So again, two sides of the coin. I hope everybody gets that. I try to make that as clear as possible, but that is a big concept to get right in your mind. Okay. So if finding reality, so we went all this way. I'm going the wrong way. Okay, income statement, profit. We talked about that. Cash flow. That's the one side of the coin. Okay, and then the other side of the coin is the balance sheet. So we had the profit and loss, we have a cash flow statement, and then we have the balance sheet. And I learned the balance sheet is, they say, a snapshot of health and what you have versus what you owe, assets versus liabilities. I learned it as what you're worth. What you're worth. How much assets you have. Assets, liquid or cash, CDs, those kind of things. Fixed assets, computers, hardware, build outs, land, developed land, I don't know, all kinds of assets. Intangible assets. The value of an intangible asset would be looking at your logos. So if you paid someone for your logo, think of the Nike logo. The Nike logo, they paid the designer, I think, $150 for that logo. And she was happy as a lark. But if they sold the rights to that logo, the Nike logo today, $1 bazillion, the difference between the 150 that they bought it for and the bazillion that they can sell it for is an intangible asset. Assets, your inventory, equipment, cash. Liabilities, your loans, your bills, your debts, those kind of things. So your assets less your liabilities equal what you're worth. If you're going to sell the place tomorrow, this is a good starting point. Okay.
Leslie, we do have a couple questions in the chat.
Great. Thank you for telling me. Okay.
I can go ahead and read them off to you if you'd like.
Please. Thank you.
So Angelica's asking, where do business plans come into play for funding?
At the beginning. You need it. You need it. You need a business plan to be able to walk in the door and even sit down with the banker. And the business plan flushes out all your ideas. It flushes out your market research. It flushes out what you think your expenses are going to be. flushes out who your client is, all of those things. And if you have questions about business plans, SBDC, they have a bunch of them, and they can walk with you if you want to work with me or want to work with someone else. I'm a financial person. I can do a part of the business plan, then I would reference like a sales and marketing so they can get your sales. But we can help you with business plans, and you'll need it to walk into the bank. Next question.
Okay, the next question is from Eve, and she's asking, I made about 5K last year, but spent 8K. Not great. Oh, maybe that wasn't a question. Maybe that was just a comment. Sorry about that.
Well, hopefully those are startup costs, right? That's that personal, you got to weather the storm kind of deal as you're starting up. And so that difference of $3,000 could be like a loan to the company or something, but you're on your way. Good for you.
Angelica, she was asking if the recording will be available for all attendees. Yes, there will be a recording that will be sent out. So just to let you know on that. And we're sorry we had some technical issues at the beginning of the presentation. So the recording will be going out. And again, we apologize for that.
Oh.
It looks like that's it for questions for right now, Leslie.
Okay. Yep. And Michelle Flores, she's the gal who keeps everything running at the Northwest Metro SBDC. So there's a name for everyone to remember because she's the point person and lovely.
Thank you. I appreciate that. And just to let you all know, we will be providing some information at the end of this presentation on how to make appointments with both Leslie and all of our other advisors.
Okay, we're going to get moving. How are we doing for time? 12. Oh, we're doing great for time. Okay. 2 types of costs. You know, this just getting in a little bit to the expensive side of your P&L, basically. And you have one-time costs, the equipment, the licenses, the setup registration. And then we all know we have ongoing costs. Marketing, payroll, rent, and utilities. Okay, common pitfalls when you're working on your business plan, when you're working on your budgets, when you're doing all those kind of estimating and guesstimating. Know thyself. If you are a positive person and you think that the glass is half full, know that about your person. So if you are estimating revenue at $100,000 and you're just starting out, knock it down to 60,000. That would be that's what I would do. Don't overestimate your revenue. Everybody, you know, because that's how we're built. We're positive people. We look to the bright side. We want to think that the glass is half full or it's overflowing, but this overestimating your revenue, it gets you. It gets you. Know thyself, bring it down. And then the same thing on the flip side is underestimating expenses. It's for the same reasons. It's for the exact same reasons. It's not going to cost that much. Insurance is a great one that is always underestimated. Insurance costs more. You think, oh, $250, go to $500. Go to $500 a month. Just to be safe. Okay. Another pitfall, relying too much on credit. Yeah, that goes back to your personal, you know, we all have a good handle on our personal finances, how they flow into our prospective business. And so this would cause a lot of stress. Not managing cash flow. And this, you know, going back to my coin, you know, cash flow has its own side of the coin where your financials have to share the other side, 3 financials. And there's a good reason for that because cash is king. And you have to manage your cash flow. And sometimes you'll have to get on to phone calls, reaching out to your customers looking for payment. Other times you might need to get on the phone with your vendors and ask for a payment plan. Managing cash flow, it's a big deal. And then this one I see all the time, and this will get you messed up right from the get-go, is mixing your personal and business money. And this is another area where I say, please don't be penny wise and pound foolish. Please don't do that. Open up a separate bank account for the business at your first possible chance. Keep them separate. It will help you. Okay. They ask a few things that hurt overestimating, and then they ask which one feels most real to you. You know, if you could see yourself, which one of these things would you be doing? You know, would you overestimate the revenue, underestimate the expenses? So if you could respond or put that in a chat, you know, yeah, not managing cash flow, Brian. That one is, oh, it gets you. It gets you, it gets you. And it's a tough job. It is. Yeah. Okay, has anybody had an experience of what happens when you do mix your personal and business banking? Oh, yep, Eve. Here, she just answered my question in the chat. Yep, but was mixing personal and business at the start. Yeah, you know, you think, oh, it's so simple now. The business is so simple. When it gets bigger, I'll open it up. Don't do that. Just open it up to begin with. You know, the money that you start the account with, maybe start it with $100. That's a loan to the company or a capital contribution, owner's capital contribution. Just do that. It'll save you heartache in the long run. Okay. Okay, and now we're going to go, whoopsie, sorry about that. Another audience participation. Where are you now? Right now, right today. And honest, but no judgments. You know, are you ready to begin a business? How exciting. Or number two, you're exploring. You're putting some feelers out there. Not too sure you got a great idea. Madeline, good exploring. Are you almost ready? Your toes are at the edge of the pool and you're ready to dive in. Yeah. Or for you're ready. You're in the water. You're doing it. Yep. So if everybody could kind of give us a recommended. All right, Janet, CPA. Yep. Michelle's responding to general business legal advisors. So specific emails, if you guys are starting, you know, I'm going to need some help with this. I'm going to help with that. Reach out to Michelle. Dee says, I started my business a couple of years ago and have been working on it full time for about 1.5 years. So good. Keep going. Keep going. It's, you know, we're Americans. We love our businesses. So, okay. And then your next steps. If you're not ready yet, no judgment. Okay. This is a time to your personal financial house in order. This is a time to say, hey, we've had too much here. Start strategizing. Maybe this is a time to visit with your CPA or legal or people in your community and get more information. Looking, you're almost ready. You're starting planning, validating your ideas. Or if you're building your strategy and you're going, the SBDC is here. And again, I cannot just sing from the mountaintops, really, how many good services that they provide. And that market research, you got me with that. But then all of the advising that they have and the follow-up that they have. They can help you with business plans. They can help you with marketing plans, you know, all of it. So if there are any other questions or comments, I feel like, boy, it's only 1 o'clock. We have a half an hour. So I just want to kind of open it up and see where it goes. If anybody has questions, if not, you know, and if you're done, so nice having you here. And
Leslie, there are a few more comments in the chat. Danielle mentioned she went forth full force, but need to go back to the beginning to complete the important foundational steps, business plan, operational agreement.
oh, sure. Okay.
And then Roxy commented she started her biz in 2021, spent the first 2 years proving the concept.
Nice.
And Julia does have a question. She says, curious if you have a recommendation for the financial bookkeeping for a solopreneur.
Absolutely. They have the SBDC advisors have referral listings. And we're talking referral listings from CPAs to legal to marketing to grant writing, all throughout. And we can get that information when you work with, or just reach out to Michelle, and she's the point person on how to get this kind of information. But they have, if you're looking for information on business, the SBDC will more than meet your needs. So please reach out to them.
Thank you, Leslie.
Yeah.
Also, Eve Fisher, she does have a recommendation. She says she uses Janet Kronk in Arvada.
Okay.
So that's a
Okay.
fellow client's recommendation.
Okay.
Madeline says, I'm looking at starting a thrift store. How do business track the monetary value of donated items in the financials?
Donated items in the financials that you would resell it for. There, the IRS has resale values, but it's the market. It's the market, because like a used pair of Levi jeans in Denver go for a different price from New York. But there is comparative tools out there, and it's just basically what market. And if you go to the market research guy, I bet he will give you, or she will give you 2 or 3 sources to go in and check brands and pricing. Yep.
And then Juliet is asking, she says she's thinking more about a program to track finances such as QuickBooks. And Eve commented, she said, QuickBooks is expensive. Janet built an Excel spreadsheet I can use. Are there other recommendations, Leslie, that you may have?
Well, I have a real small, and I can put it in the chat here too. I call it my simple spreadsheet. And it is exactly that. Just to kind of give you a quick overview, it is the columns across our months, January through December, and then it's totaled. Okay, that's your columns. And then your lines, there's 3 sections of your lines in your Excel worksheet. The first section is revenue, and then that is totaled. And then your second section is cost of goods, and that's totaled. And then I call this the first stop sign, is your total gross profit or loss. When you hear about people saying, my profit margin is whacked up, my profit margin needs to go, this is where they're talking about. Revenue less cost of goods equals your first stop sign, total gross. And if you are not making a healthy profit margin here at what you do, cost of goods are the expenses that are directly related to what you sell. Think of it as what the customer receives, that is your cost of goods. So your revenue and the lines in the revenue section, there's multiple lines there for a reason, multiple revenue streams. We want to itemize those revenue streams. And then cost of goods has multiple lines because we want to itemize those cost of goods. And those cost of goods expense should reflect back to our revenue. So if I'm selling a $50 t-shirt, one of my revenue lines is white t-shirts. And then I'm buying this from t-shirt company in Broomfield. That's cost of goods because I want to see simply my revenue for that revenue stream less my cost of goods from that revenue stream. And over the months, I'm going to see a story. It's going to go up and it's going to go down. And why did it go up in June? But you'll figure it out. Why did it go down in September? That might be an answer for your banker when you're asking him for money. Okay. Total gross margin. Then we get to the third section, which is our operating overhead expenses. Again, multiple lines because we got bank expenses, we got rent, we got insurance, we've got payroll. That is totaled. Then our total gross less our operating equals total net. But this spreadsheet with the columns as months gives you a multi-dimensional view of your financials in a simple format. And one thing you can say is this is a Leslieism, but I hate myopic reports. So if someone comes to me and gives me a profit and loss report on someone's company and it's 1 month, it's for April last month. Okay, great. I want to see it compared against something. I don't want a myopic view. I want April in the sense of the past 12 months. I want April against January, February, March, and April. I want for this whole year. I want April compared to last April. I want my reports to give me a whole different perspective. I want to look under the curtains. I want to look this way and I want to look that way. Okay. But this simple spreadsheet gives you that because month over month, you can see your activity. When you buy a new telephone and you think, oh, it's only going to cost me $20. Well, your expense in February was $25. You bought the new phone with all the gidgy-gadgies, and now you're up to $65. And look at what that did to your margins. Those little shifts make a difference. This simple spreadsheet, you complete it from your bank statements. It shouldn't take more than 15 minutes every month. And I like my new clients to work this spreadsheet for 2 years. And this is the reason why. I do not like them going to QuickBooks because QuickBooks is too beefy. You're not going to learn your numbers working with QuickBooks. You need to work with your numbers to learn your numbers. Because month over month, if you're doing it, then something's going to prick your, why did that happen? What was this? And you're going to go back and you're going to investigate. And that investigating and reworking and doing all that is going to give you the knowledge and the power so that when you're starting to hire a bookkeeper or you're going to go to QuickBooks and someone's going to start helping you, if you hire me and you say, okay, Les, you're going to do it, and Les comes, and I say, here's your April financials. Within a nanosecond, you're going to know if those financials are sound or not because you know your numbers. The, the businesses that have fraud within their systems, are business owners who do not know their numbers. And that's as simple as I can tell you. Because the minute they know their numbers, they know if something is out of whack. And the numbers, the financial report, is the confirmation. Because 9 times out of 10, the business owner kind of felt something was up, something's off. Because they know their numbers. They worked it for 2 years. They know the cycle, because in January, my revenue is always high and then it goes down in May. They can answer any question that they bring into a banker. They bring this spreadsheet and bankers will love you. Another thing about these simple spreadsheet is you use it for your tax returns. A lot of you are LLCs, and this spreadsheet, you can use it for your tax return. So I'll put it in the chat right now and use it as you will. Or if someone else had a little spreadsheet that they would like to share, please do. But I really like the idea of you working on your own business financials. And it's simple. It's not hard. It's not hard. Okay. Questions, comments?
Juliet just said, good strategy. Thank you.
Oh. Yeah, and it doesn't take a long time. It doesn't take a long time.
Eve also commented that she refers to her bank statements for her business.
Yes, that is the place to go. Absolutely. And it's not just looking at your bank activity over the month. You all review your bank statements.
That looks like that's it for comments and questions. If anybody else has any others, please add them to the chat.
Okay. Yes, well, it was so nice having everyone, and I hope you've learned a little bit. It's very basic again, but we are all here to just to help and to be a resource, because you don't know until you know, and we kind of like to fill in the gaps. And after about 30 years, I've got all this experience. I need to start giving it back and helping. That's my deal for being an advisor, is to help people so they don't make the pitfalls that I made.
And we appreciate you so much, Leslie. We absolutely do. The North Metro Denver offices, we are just so grateful to have you join our team, and you are just a wealth of information. I have actually added to the chat here how you can schedule an appointment to meet with Leslie. Leslie is a lead. She does her appointments through a follow-up appointment. So if you haven't already met with one of our lead advisors and you are part of the North Metro SBDC area, we support Adams and Broomfield counties. But if you don't reside in our area, we can always connect you with your local SBDC office. We have 14 offices throughout the state of Colorado. And we did have a few people that were asking about the market research advisor. That's Jay Ballenberger. And if you have not met with the lead advisor, you still need to meet with the lead advisor before you can meet with Jay. But again, if you're part of the North Metro Denver area, we can schedule an appointment. I know he does work with some of the other SBDC offices throughout the state. So please reach out and let us know. And again, if anybody has, let's see here. Oh yes, shall be. And any Westminster businesses in Jeffco. So Jefferson County, again, we can connect if you're not actually in our location. If you are outside of, if you need to be connected with the Jeffco SBDC, we can also connect you with the Denver offices. They have a great team as well. We thank again the City of Westminster, Shelby Wood. She's been on call here with us, and we're so sorry. We had some technical issues in the beginning, but again, we'll be sending out the recording of this presentation. Leslie, thank you again for everything.
I
And
didn't even see any hiccups or anything, so I was oblivious.
well, thank you. And again, we appreciate everybody that has joined us. And if you ever have any suggestions for upcoming program, please reach out and let us know. Again, City of Westminster, Shelby, we appreciate you and everything that you do to help support our businesses. So thank you again. And Leslie, unless you have any other comments,
I
questions?
just added the simple spreadsheet to the chat. So do your worst, people, and I wish you all the best.
Thank you so much, everyone. Have a good day.